Joining us for a conversation is JAYANT Bhandari. Mr. Bhandari is the founder of Capitalism and Morality, and he is also a highly sought-out advisor to institutional investors. Mr. Bhandari, welcome to the show.
Thank you very much for having me on, Maurice.
Well, it's great to have you back on the show to discuss the current state of the natural resource space and some potential buying opportunities for our audience members. JAYANT, let's begin with physical precious metals. Based on the geopolitical and fiscal challenges throughout the world, should gold and silver be higher?
Absolutely, Maurice. The world is increasingly becoming very chaotic. The globalization system is falling apart and there is nothing to repair it right now. The problems with China continue to escalate. The Taiwan issue is always there. The Ukraine and Russian problem continue to get worse, and the third world countries are falling apart. That means that the globalized system is at a huge stress. And the US dollar is under increasing pressure because America decided to use the US dollar as a tool to punish other countries. So it is starting to, the US dollar is in problem now. So given all this situation, we really have a chaotic economic situation and a chaotic social situation as well. And gold and silver become extremely important in chaotic situations because what you own in your hand is no one's liability. It's your property. It's in your hand.
I like how you're being responsible with your words here. You didn't reference manipulation or some conspiracy theory. You just stated some obvious facts here. But let me ask you this in reference to that. Which precious metals have your attention at the moment and why? Is it just gold and silver?
Yes. I mostly prefer gold and silver, and actually primarily gold, Maurice, because the fundamentals, the relationship of gold price with the chaos of the world is more direct than of any other precious metals. So if you have palladium, platinum, or rhodium, they have a lot of industrial usages. So there are many factors behind pricing of those commodities.
Now, leaving the precious metals, what are the base metals indicating to you?
You see, the market is increasingly worried about the economic situation in China. I am not worried about Chinese economic growth. I think China has a lot of more growth left in it. Now, Maurice, I haven't been back to China for the last 2 or 3 years, but I continue to meet a lot of Chinese. I continue to, and hopefully I will be in China next month. I think China has a lot of growth left, so there will be short-term hiccups because we have all these globalization and chaos situation right now. But I continue to be very optimistic about China. I think China will continue to consume commodities going forward. China already consumes about 50% of virtually every commodity we can think of, from cotton to iron ore to coal to base metals. China consumes 50% or more of everything.
Oh, they have a huge appetite for resources. All right, moving on to resource stocks. I speak with speculators daily, and the sentiment in general is a mixture of confusion, frustration, and nervousness. As an advisor to institutions, can you provide us with some insights that you're discussing with your clients?
So Maurice, this is going to be a lengthy response, people should be confused but not frustrated because what is happening is something that should have been expected. Let's talk about the mining stocks. Firstly, people often conflate commodity mining with the underpinning commodity. You should never ever do that. And the reason is, Maurice, that let's say when gold price goes up, very often what happens is that the cost of mining and processing gold goes up as well. and often it goes up faster than the increase in price of gold, which means that the profit actually gets squeezed rather than enlarged when gold price goes up. And this is what you often see. This is what I have seen over my years in the mining industry. And the end result is that, let's say GDX has underperformed gold despite whatever time frame that you look at. If you look at 5, 10, 15, 20, 30-year time frame, gold tends to outperform, or at least is very closely correlated with the mining stocks. Mining stocks do not offer you the leverage that is often talked about. So those people who invest in the mining stocks for leverage are on an erroneous path. Now, while these commodities are, there's still a correlation between gold and mining stocks, and as I said, there's no leverage in mining stocks. The next thing is the junior mining companies, and junior mining companies are a completely different game altogether. They don't necessarily respond to changes in metal prices. They respond to what actually the company is finding in the ground over a medium term. Now, Maurice, when I started working in the mining industry, the venture stock exchange was about 3,200 or something. That was 17 years back. Today, it is about 600. So basically, in real terms, you have lost anything but something like 80% of your investment in the last 17 years. Now, if I am expecting about 20% growth in my investments every year, I would have expected my 3,000 index to have gone up to about 50 times, which is that I would have expected the index to be about 150,000 when it is actually only 600 today. So that is what the destruction of the value in the venture stock exchange has been, which means, Maurice, that an average guy is going to lose virtually everything he invests in the junior mining sector. Junior mining sector is extremely risky. You have to be extraordinarily picky about where you invest your money. You will lose money if you're not very, very, very careful about where you invest your money. You should never invest in the junior mining industry for the commodity that drives you passionate. You should invest in a junior mining industry because of what you think they have in terms of the ground that they own and the quality of the management they own. And you have to have a valuation which tells you that the valuation of what you see right now in front of you is higher than the price the price you are paying to invest in that company. Unless you do this properly, the chances are that you will lose virtually everything. As I said, what was 3,000 junior index in 2016, 2017, 2006, 2005 is actually now only 600. So you have lost about 80% or more in real terms of what you invested in 17 years back. So you have to be very, very picky and very careful in terms of what you invest in.
And speaking of that, would you mind sharing with us, are you more interested or do you see a better opportunity in the grassroots or development stage or the mining?
Well, I am invested across the board in all the three kinds of subsectors. But I have traditionally found mining companies to be very expensive. That said, I am invested in one gold mining stocks, and Maurice, I am invested in a lot of coal mining stocks. These are all multi-billion-dollar market cap coal companies, and they are trading at a huge discount to their inherent value. So among the mining stocks, the only companies that I'm invested in are primarily coal companies. I can give you names if you want to at some point of time. And the reason, let me just very briefly tell you why I'm so keen on coal companies. What is happening, Maurice, is that institutional investors are no longer investing in coal companies. They are very afraid of their ESG profile if they have coal companies in their portfolios. Now, of course, they are not shy about using electricity made from coal, but that is a hypocrisy we can talk about at another time. And what you see with Glencore or Teck is that they want to spin off the coal portfolio into other entities, as if spinning off would reduce carbon emissions. So this is the kind of hypocritical world, woke world that we live in, but it is what it is. The problem is that the big people with big money have sold off their coal company stocks, which means that coal companies have now traded down to an extremely cheap valuation. Now, at the same time, Maurice, we are using more coal today, very strangely, than we have ever used in the past. In 2022, we used more coal in the world than we ever used in the past. And in 2023, we are very, very likely to use more coal than we used in 2022. So the world does something else and claims to do something else. But having said that, coal companies are trading for price to earning ratio of 2 or less than 2, which means that these companies are generating, if they're let's say their share price is 5, they might be making a profit of more than $2 or $3 every single year, and they might be sitting on cash worth about $1 or $2 every share. So that's the kind of profile these companies have. Now, these billion-dollar coal companies are sitting on huge amount of cash. And the reason is that these companies know very well that when the time comes, neither the fund managers nor the banks are going to give them any cash to put their mines into production. So they are well cashed up and they keep their cash in the treasury. So this is what I can say about the mining industry. I'm mostly primarily invested in coal companies at the moment. As far as the development stages companies are concerned, a lot of risks would have been reduced by the time a project comes to a development stage. But Maurice, again, remember that one person in a conference recently told me that it takes about an average of 2-3 years to find a project and put that into production, which means that when I find a project, and if I'm expecting a 20% return on what I invest now should be worth about, every dollar should be worth about $55 by the time it goes into production. And assuming that I don't lose any money elsewhere. But because I do, I actually should expect 100 or 200 times my investment in any junior mining companies. So again, junior mining companies are a very risky game. With the development companies, a lot of risks will have been reduced. And then I try to understand who might be acquiring those projects, what the product, when this project might go into production, and what the quality of the management is, and how much I can trust those people. If I understand that well enough, I do invest in development stage companies. You can get good deals in development stage companies, and also because your downside is relatively well protected in development stage companies. Now, coming to the junior mining stocks, as I said, they are an extremely risky business, and you should be careful in what you invest in, because you are going to lose most of your money unless you are very picky. And the prime interest that I have when investing in a junior mining company is that I must understand the quality of management very well. And I must understand that these are the people who are reliable, who are ethical, who are business savvy, and who understand valuations, and who make sure that every dollar they put into the ground creates a value of more than $1 in the market capitalization of the company. So that's how I go about these companies. And I'm invested in base metals and gold among the development stage companies and junior, the venture stock small companies.
Going back to coal, number one, that is a brilliant contrarian play, if I may say. And you asked the question, did we want to know some names? I'm sure everyone has a pen and paper out right now. If there are some companies that pique your interest and you're willing to share them, please do, sir.
Okay, so firstly, two US listed stocks. One is Peabody Energy. The ticker is BTU. It's trading at about $20. Another company is Warrior Met, and it's trading at about 35 American dollars. So these are two American companies. Coal is a big product in Australia. So I can mention about at least four Aussie companies if you're interested.
Absolutely.
One is Coronado Global, ticker is CRN. It is trading at Australian dollar 1.39. Yancoal Australia, ticker is YAL. It's trading at Australian dollar 4.60. Then there is Whitehaven, and the ticker is WHC. It's trading at Australian dollar 6.40. And then there is a last name that I have in front of me is New Hope Corporation, NHC, and it's trading at Australian dollar for 5.40. All of these companies are very cash rich. They're trading at P by E of 1.5 or 2. And they are, I think they offer good value if you buy them as a portfolio.
Would you also be willing to share some of those other companies that pique your interest on the development side and the exploration side as well?
Okay, so let's talk about one development side company that I like quite a bit. It's a company with projects in West Africa. The company is Montage Gold. The ticker is MAU. The share price is 63 cents Canadian. It trades in the Canadian Stock Exchange. They recently raised money at 70 cents. They are well cashed up. They have a large project. And remember, Maurice, it's probably a lot easier to put a project into production in Africa today than it is in many other countries. These are Montage Gold is backed by a solid group of management. So I think the downside risk in Montage Gold is very low and the upside is very nice. Now, one thing that I have learned over the last 17 years, among the many other things, is that make sure your downside is protected. I don't want to lose my capital as much as I can protect it. So I think Montage Gold gives me a good downside support with a nice upside. If you want to know about two small venture exchange companies, I'll mention two to you. One is Gold 79 Mines. The ticker is AUU, and it's trading at 2.5 cents, 3 cents. I am well invested in this company. They have at least one fabulous project and two projects that they have optioned to other parties. I like the management, and I think the valuation is extremely good at the current price of 2.5, 3 cents. And the last small company that I want to talk about is Aztec Minerals. They have two very good projects. The grades that they have hit at their project in Arizona have been extremely good. They are trading at 29 cents Canadian. The ticker is AZT. They also have a project in Mexico, and that project also has given them very good grades. I think both the project, the one in Arizona and the one in Mexico of Aztec Minerals, each is worth enough to justify the current market capitalization. The reason why I'm probably one of the bigger shareholders of Aztec Minerals.
Well, Mr. Bhandari, thank you. Thank you so much for sharing that with us. And if I may also share that Gold 79 Mines is a sponsor and we are shareholders. And we also conducted a thorough interview with Derek McPherson earlier this month that highlighted the value proposition of Gold 79 Mines. And I wanted to go back just for a moment. Are you of the opinion that we are in a bear cycle in a secular bull market, or am I wrong on that?
Oh God, Maurice, I have no way to comment on that. I think we can play with these words. The world is what it is, and it's very hard to see into the future of what is coming. My way to invest is that I invest for value. If I see value, I invest in it. If I find something that in my view is worth $3 a share, and if I can get it for $1, I buy it. Now, if it's a bear market and my value, what I see as value becomes $2 eventually, I will still be left with 100% upside. So that's how I go about investing in the market. But I, so when I go about stock picking, I don't wait for the peak or the bottom or for any signals on when the bear market might end or when the bull market might start. Because all these things are things you can claim in retrospect. You can't foresee them. So I don't go about that when stock picking. I just see value, and if I see 100%, 200 or 500% upside, I just go for it and sit on it, sit it out, and usually I overall as a portfolio do well with that. But as I said, globally, the world is in a chaos, and this is always a problem because we can try to connect our stock performance with how the world will move. But there are so many other factors with how the world will move and how it will affect our share prices. And the problem is that one person might say, hey, I'm very afraid about investing in the stock market, so I will encash all my money. But what if the world moves in a way that your cash gets destroyed because your cash is fiat currency anyway? So, trying to do a one factor analysis of what the world is what the share price will be 6 months from now has never worked for me. And I have never met a person who could predict into the future what was going to happen 6 months later.
Oh, wonderful, wonderful words of wisdom there. Now, Jayant, you've been most generous to us already with the stock picks there that you've shared with us. When it comes to arbitrage opportunities, your name is second to none. Do you have any to share with us?
Well, so there's one company that I mentioned to you last time when we talked. That company is on its way to close the merger with another company. And that company is Anacortes Mines. The ticker is XYZ in the venture exchange, and it's trading at about 37 cents Canadian. I think the last time I saw it, there is an about 15% arbitrage upside. Now, Maurice, this is very interesting, and this is something I face often with people. People are not interested in a 10 or 15% arbitrage upside. For me, it's an extraordinarily sexy upside. The reason, Maurice, is simple math. If I can actualize a 10 or 15% arbitrage upside in a 15-day or a 1-month period, then if I compound that money over a year, I can make more than 100% in a year. So, I am more interested in protecting my downside. And if I can then be sure of 10 or 15% upside, I'm more than happy to invest because, again, protecting my capital is more important than aiming for a 10-bagger.
Well, beauty is in the eye of the beholder, and I think you're absolutely correct on those words of wisdom again. Now, before we close, Jayant, all of the aforementioned are connected in one way or another to a subject that is your life's passion, which is philosophy. For someone new to your work, how does philosophy apply to our discussion today?
Maurice, firstly, I'm not a money-minded guy. I enjoy making money. I enjoy making value investments. And I think accruing capital is in a way very similar to accruing intellectual capital. So everyone must try to accumulate intellectual, spiritual, and financial capital. That's how you build civilization. That's how you grow. That's how you construct things and leave better things for the future generation. Philosophy underpins everything. I want to understand what makes a society, a civilization, what the Western values are, because Western values made the West the only civilization on the planet, values which eventually got copied in East Asia. So I like to pay all these attention to all these things, Maurice. I read a lot about these things. I read a lot about the religion of the West, which is Christianity, and the Roman culture, what happened in the Middle Ages. I like to listen to philosophy lectures, and I run a philosophy seminar every year in Vancouver. The next one will be on the 9th of September 2023 in downtown Vancouver. I bring in people who speak their mind without being afraid of the consequences on their career. There's Dr. Amy Wax, who is going to be speaking on the culture war that is happening, the wokeness that is increasing in the society, which is nothing but feral behavior that is being inflicted on North American society. We have Rick Rule, who is usually a speaker, Adrian Day, Jeff Deist, who until recently was the head of the Mises Institute and who was also the right-hand man of Ron Paul. So these are the kind of speakers I have at the seminar.
Now, Jayant, if somebody wants to see previous year's presentations and also registration, where should they go?
So they can go to my website, jayantbhandari.com. There's a tab called Capitalism and Morality. All the videos of the past years are listed there. They are available for free of cost. And you will find a lot of enlightening stuff there. A lot of lives have been changed by those videos, because these are the videos in which people have spoken about their subjects without being afraid by the cancel culture crowd. And this is why I take a lot of pride in what I do in this seminar. The price of the ticket currently is 160 Canadian dollars, which comes to about 125 or 130 American dollars. And they can get a 10% discount if they use a coupon code of P and P, proven and probable. So P and P, and they can get a 10% discount rate. And if anything goes wrong, they can send me an email and I will send them a coupon code again.
Before we close, Mr. Bhandari, what did I forget to ask?
Well, Maurice, I'm hoping you can visit my seminar again. I know that you like to combine it with Rick Rule's conference usually. Rick Rule is not doing his conference this year in Vancouver, but my hope is that in 2024 he will be back in Vancouver. So if not this year, I want to see you next year at my seminar. I think we have talked a lot, Maurice, and something that the one thing that I always I'm very interested in is the third world future. And I see a lot of third world countries failing, Latin America going increasingly woke, rapidly very leftist. I see India falling apart completely. They have just started demonetization of another currency bill. Which has led to a dual rate currency system similar to what exists in Argentina. I think India will face huge problems over the next few months. So I think everyone should be paying attention to it, particularly when a lot of people in the financial industry think that India is now the next China. India is not the next China. It is never going to be the next China. I just hope India is not the next Rwanda.
Well, you said a lot here. So number one, you put a lot of pressure on me. I definitely want to attend. I'll work on it. You have my word on that, sir. Second, for all the aforementioned that you just referenced, let's get you back on the show to discuss them, because I know everyone wants to get your insight. Mr. Bhandari, it's been an absolute delight speaking with you. Wishing you the absolute best, sir.
Thank you very much for the opportunity, Maurice.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.